Get ready for more valuable financial insights from Northern California's premier retirement income planners, Dan Ahmad and Jim Files, owners of Peak Financial Freedom Group. For more information, go to peakfin.com. And now, here's Dan and Jim.
I'd like to welcome you all to the Peak Financial Freedom Hour. My name is Dan Ahmed, here with my partner, Jim Files. We're going to have a great show for you today. You're probably feeling like most people are right now, uncertain about where the world is going, and we hope this data will bring more certainty and hopefully a lot less stress to you once we go through this information. And we'd like to thank all those of you listening right now, and especially those that have listened for weeks, months, even years to our show to try to get as much information as they can so they can learn to then make the decisions they need to make for a financially secure future. And it's key because how much data, how much education, how much information is actually out there that you've been able to find that teaches you how to make the right decisions for a secure retirement. And there's minimal, if any. You look at how much data is out there. It's all about investing. It's all about a portfolio. It's all about staying the course, hanging in there, getting the best rate of return, which has nothing to do with a secure retirement. That has to do with having a secure accumulation mode before retirement, but it has nothing to do with retirement. So we'd like to thank you for listening. A lot of you have been listening for years, and we want to make sure you all know that you can call into pound 250 on your cell phone, pound 250, say the keyword money. And if you have questions, let us know. If you want to meet to produce a actual written plan to show you what you need to do to have a secure retirement, just call pound 250 on your cell phone and say the keyword money. We'll be glad to see if we can give you some help. Jim, why don't you, as usual, give us a financial wisdom, a quote of the week.
Okay, this comes from Warren Buffett. I think everybody knows who he is. He says, risk comes from not knowing what you're doing. And Dan, that fits in exactly what we do every single day here in our firm. We have new people coming in daily here to meet with us to see if we can help them model a portfolio for retirement. And I say this so nicely with no judgment, but most people don't know much about their money. They know it's invested. They might have a 401k. They might have an IRA. They might have a trust account, a brokerage account. They know the money's invested. If the market goes up, they make some money. If the market goes down, they lose money. But they don't know how to develop a plan that will make sure they have a successful future. And what they have is a bunch of statements and a bunch of investments, but they really don't have a plan in place, Dan. So there's no way, we believe, anybody can navigate retirement successfully without a plan in place.
Well, what you just talked about there really is the tip of the iceberg when it comes to worrying. And worrying means we're afraid of something or fear. Well, human beings, all of us, Jim, I, all of you listening right now, our number one biggest fear doesn't come from things that we're certain about. It comes from things we are uncertain about. And if you think about it, that's what you're afraid of, the things that you don't feel like you have any control over, or you don't understand, or you're not sure what the outcome is going to be. That's what causes the fear for most of us. We're big boys and girls. We can handle the truth. So if we know black and white, boom, even if it's a nightmare, worst case answer, at least we now know what to do to plan around that. When you don't know what the answer is, you have a high probability of screwing it all up. Second thing, Jim, you talked about there was, you said it nicely that, most people don't know much about their money. Well, I think it's even more than that. I don't think anyone, I'm just going to make that statement. I don't think anyone knows enough about their money to make the right decisions once they retire. I think most people have been really good at accumulating assets because there were rules put in place. You save as much money as you can. You keep putting money into your 401k, your 403b, your 457. Whether the market's up or down, you don't worry about it. You don't watch it. You know you have time on your side. You're trying to get a really good rate of return, and you know you have the long term to plan for because you don't need to use the assets for income. Well, those are some simple rules to go by, and all of us can understand those, and it's simple to do that. So a lot of you have been good savers. The issue is you always thought, once you saved all this money up and it's time to retire, well, surely at that point, it's going to be easy. Surely once you saved $1 million, $2 million, $3 million, $5 million, that has to make it easy and you won't worry as much. The problem is at this point, you've saved all that money and now things are even more uncertain in the world, which means things are even more uncertain with your money, which means you worry more now than you ever did. Is that correct?
That's exactly right. Because what people have been doing for the last 40 years, if they're working, is number one, they're making those contributions, as you mentioned, Dan, to the retirement plan. and they didn't think about it because they had a paycheck coming in. They had a job and they didn't have to worry about their money. But all of a sudden they get close to retirement or in retirement. They're saying, okay, I'm not going to have a paycheck. I have this money invested in my retirement plan. How do I use those assets for income to make sure I won't run out of money? So they sit there worrying now more than ever because they don't want to make a financial mistake. They want to make sure they have enough income for as long as they live. They want to make sure that if they do need money for long-term care, either one of the spouses, is there going to be sufficient capital there? They know there's inflation, and is there enough growth in the portfolio or enough income, I should say, to make sure they can handle inflation? And most people have kids or grandkids, and they're saying to themselves, with it being so difficult right now for young people to buy a house or for grandkids to go to college or even them to buy a house, they want to say, is there any way they can leave money for their kids or grandkids? And every single person, Dan, that we have come in has those same goals, right? And kind of in that order, them first, kids and grandkids second, but they have no idea how to structure and remodel their portfolio to make sure they don't make a financial mistake and they have that income forever.
Well, and that's why what we do is create rules for people who are getting ready to retire or who have already retired, because there's no rules out there for you right now. The rules previously were hang in there, write it out, keep saving, keep investing, don't watch it, don't use it. And sometime way in the future, you can use it for income. Well, the problem is we are now at sometime way in the future. You're retired or getting ready to retire, and yet you have no rules to play by. And the rules that you played by before will potentially put you into maximum jeopardy of financial chaos, financial ruin, if you continue to follow those at retirement. Because what if right now, with the market being as crazy as it is, the world being as crazy as it is, what if we are getting ready to go into a 2001 and 2 or a 2007, 8, 9 type of market decline? And let's say you're retired or getting ready to retire, and the S&P 500, what's considered a moderate index, drops more than 50%. And let's just say you're invested moderately and you drop more than 50%, even though you didn't know you could. Do you think there's any way possible you're going to have a successful retirement?
The answer is no. And that's a warning sign. That's a warning signal that we're giving everybody right now, is that we don't have a crystal ball. We don't know when this market's going to take a big dive down. But we can tell you, in the last 25 years, there have been 50% crashes. You had $1 million, you lost 500,000. Now, if you're 40, you had less money and still had 25 years to work. It didn't matter as much. But if you're 60 or 65 or 70, that happens, it's going to change your life. And it's not just us saying that. We get lots of different reports here, news feeds at our office. And in the past, half the people said the market's going to go up and half the people say the market's going to go down. But right now we're seeing 80, 85%, even 90% of these forecasters. These are Nobel Prize winners. They're Harvard MBAs. They're economists. They're all saying the same thing. Folks, you better watch out. This market has gone up over the last many years. It has to reset, and it's going to reset dynamically downward in most cases coming in from these analysts. And if you're not prepared for this, you're going to lose a lot of money and you're not going to be prepared for retirement.
Well, and here's the black and white, take the gray area off of it, what you're talking about, Jim, and that is when we're young, we can always plan for the best because we have time on our side to make up if the worst happens. When we're older, getting ready to retire in retirement, you cannot plan for the best. You cannot be hoping for these big rates of return. You have to plan for the worst case scenario. And as long as your plan works in the worst case scenario, if something happens better than that, which it has to be worst case or better, then you're going to be fine, which is how you have to put your plan together. And I think that's the whole goal when it comes to understanding how to do the planning. And if you'd like some extra help, call into that pound 250, say the keyword money, or log on to our website, peakfin.com, and let us know. We can get you our most recent free book. It's called The Golden Promise. It's a very easy read, about 80 pages, and it will teach you the mandatory issues of what's needed to make sure you have the highest probability of a secure retirement. And that is by putting every single thing about your money in writing. Right now, none of you have an actual plan in writing, unless you're our clients already, that shows exactly what you're doing, how you're doing it, how much income you're going to get, what your taxes are going to be, what your fees are going to be, what your risk is, how much you can leave your beneficiaries. You don't have that. How in the heck can you go into retirement, or how in the heck can you be in retirement now without having that, without worrying your butt off? And I guarantee you're worrying your butt off, but you just kind of stick your head in the sand like an ostrich and say, I'm not going to worry about it. It'll blow over. Everything will be fine. Well, hopefully And 50% of the time, everything will be okay. But if you're not okay, you got to make sure that. So that Golden Promise is a great book. You also can download for free our most recent Amazon bestseller. That's Mama's Secret Recipe for Retirement Success off our website. No cost. Download. It's a 500-page book of unbelievable information, including the 7 rules to plan by to make sure you have a successful retirement. We teach you all the rules right there. You don't have to become our client, and you can now understand exactly what you need to do. Second way, Jim, we can help people is by offering you a free dinner seminar. If you've been a good saver, you saved over $1 million up to this point, you need answers, you need guidance. Call our office or use pound 250 on your cell phone, say the keyword money, and we will then let you know if there is an upcoming dinner seminar at a great restaurant in your area that you can potentially attend to find out, does what we talk about make sense and does it fit for you, Jim?
The way you mentioned that, Dan, is that's a lot of data. That's a lot of information. A lot of folks listen to this radio show. They say, yeah, I'm going to call Peak Financial. I'm going to come in. I'm going to have them assess where I'm at. I'm going to have them help me. But, life gets in the way. They don't do it. They procrastinate. Just things happen. This is a way for you to go on our website or call our office, get free information, get lots of great data so that even if you don't want to come into our office, if you want to work for your same advisor, we're giving you direction. We're giving you a roadmap of how to be successful in retirement. So we do offer this because we can help you. And whether you use our firm or not, it's great information to guide you through retirement successfully.
You're back with Dan Ahmed, Jim Files, the Peak Financial Freedom Hour. Thanks for hanging out with us and trying to educate yourself on things that you can do that will enhance your financial security throughout retirement. That's what we're talking about. That's all we talk about. It's all we do. We're I call it a strange firm, very unique firm, and that all we work with are retirees or soon to be retirees. We don't work with 20 somethings, 30 somethings, 40 somethings, and 50 somethings. The younger end of 50 somethings are pretty rare. From 55 on, we work with people, and the average client really is between 59 and 75 when they start working with us. And these people are unique in that they are retired or getting ready to retire. They have already accumulated assets, because if you haven't accumulated assets by then, you're probably not going to accumulate assets. And if you haven't accumulated assets, you don't need us. We are a planning firm that's going to protect your hard-earned assets, what you work so hard to accumulate, from big losses, and then use those assets to do something you have no clue about, which is to then create lifetime income that will replace your paychecks. Think about it. That's simple. That's what we do. We reduce risk of large losses, and Jim, we create income that will be paid to you as long as you live to help replace the paychecks, which is people's biggest fears.
You mentioned those things, Dan, and I was kind of chuckling because we do this radio show every single week, and we deliver multiple hours of radio content on the weekends, KFBK and KFTE, and we talk about the same thing every time. Why do we talk about the same thing every time? Because our client base, as you mentioned, Dan, are people that are 59 and a half to 75. Every single person, if you're getting ready to retire or in retirement in that age group and you have money saved, you're concerned about the same things your colleagues are concerned about that are getting ready to retire. You can't make a financial mistake. You need income for life. How do you put together a plan to make sure you do that? And the way that you design a plan and model your portfolio is significantly different than what you did for 40 years when you were trying to accumulate those assets in a retirement plan. So our job is very focused. It's very directed. It is saying we can take those assets and reposition those assets to make sure you'll have income for life that won't run out, number one, and number two, so that you will not suffer a big financial mistake, whereby if the market suddenly drops, you're not going to lose a lot of money. And that's the goal. That's the key to a successful retirement.
Well, think about it. Right now, if you have a 401k and let's say you're still working, are you worried about it? It's 99.99% you're worried about it unless you have it sitting in a cash fund or a guaranteed fund, which most of you don't. So you're worried about it. If you have old 401ks sitting out there from previous employers, are you worried about it? You're definitely worried about it. If you have IRAs that you have rolled over in the past, are you worried about it? You're probably worried about it. Well, if you're worried about these things, the only way to stop worrying is to find out exactly what you have. So let's do an analysis and find out what you really have, not what you think, not what your advisor told you, not what your 401k provider told you. Let's find out unbiased third-party data, what you really have as far as risk and potential for gain. And then let's make the decision, are they in the right place? And if you're 58, 59, 60, 70, I will put the percentage out there that 90% of the time your assets aren't in the right place to give you the highest potential success in retirement, because they're still invested pretty much the same way it was when you were 40 or 45 or 50, maybe a teeny bit less aggressive, but pretty much the same way. So there's some good news. If you're 59 or older and you have a 401k and you're worried about it, you're scared about it, we can transfer monies from a 401k over into an IRA on a tax-free, tax-deferred basis, because there's no taxes or penalties to transfer out from your current 401k if you're 59 and a half or older, and people don't know that. I just met with a client that has $2 million in their 401k. They're so freaked out because it was 2.2 million. Now it dropped to 2 million. They're afraid it's going to drop more. We're able to take the $2 million out and roll it over to a IRA on a tax-free basis. So we can now invest the dollars on a significantly lower risk plan for them. If you have an old 401k from an old employer, even if you're under 59 and a half, those dollars can be transferred to any IRA that you want. And there's no taxes on that transfer. So you don't have to worry about getting killed with that. And if you have any IRAs, whether it was a year ago, 20 years ago, any IRAs can also be transferred, Jim, into another IRA. You just have to make sure you do it correctly. And there's no taxes for doing this. Now you can control them and minimize the risk if that's the goal.
So in summary, the only thing you can't transfer is if you're working for an employer and you're not 59 and a half and your money's in that specific 401k or 403b, that has to wait until you're 59 and a half or older. All this other stuff, or retired, separate service, right? But all these other things that Dan mentioned, you can roll them in. We can develop a plan. We can give you lots of different choices so that you can be successful. Because what most people don't understand, Dan, is that there are two major risks in retirement. There is investment risk, right? And I think everybody knows what that is. The market go down, you lose too much money and your plan's not going to work, or interest rates change in the wrong direction and you're positioned incorrectly. But also there's another risk, which is probably more devastating. That's called longevity risk. That means how long are you going to live? Or if you're married, how long are you and your spouse going to live? And do you have enough assets and enough income to support a long lifestyle? And people understand market risk, right? It's easy to understand. What they don't understand, Dan, is longevity risk. So what we have to do at our firm is we have to do two things. We have to make sure that we position your assets so you do not have a major drop in value. That's called market risk. And your assets are positioned so that you can capitalize on good markets and make sure you're protected on bad markets. But as important as that is that we position your assets for longevity risk. We need to make sure that we can generate enough income on an after-tax basis to meet your increasing budget every year due to inflation so that you will not run out of money. And Dan, that feat and that direction on how to develop a plan is completely different than what people have now in their investment portfolios.
Well, you just summarized exactly what we do, why we do it, how we do it. We make sure that portfolios are positioned at this point in life to minimize investment losses if the market does have a significant downturn. And we make sure that longevity risk is taken care of by creating income at a high level that's going to be paid to you for as long as you live. Forget about every single other thing you've heard, listened, that you think about your money. What are the two most important things to do at this point of retirement? And it's simple. Minimize large losses and create income that will never run out. Nothing else matters. It doesn't matter who told you it. Doesn't matter what you think. Minimize large losses and create as much income that will be paid to you for as long as you live. And if you do those two things, you have the highest probability. And just like you said, Jim, how many of you are actually focusing on those two things? And it's going to be an extremely low percentage. Probably, if you're not our client, it's probably like 1/10 of 1% of you are focusing on that, which means 99.9% of you are not focusing on the two most important things to give you the highest chance of success. And you can't argue this. Think about it. Can you literally argue this? And you can't. You're back with Dan Ahmed, Jim Files, the Peak Financial Freedom Hour. Thanks for staying with us. Hopefully you're enjoying the show today. And we always want to make sure you know you can get a hold of us. Just dial pound 250 on your cell phone, say the keyword money, and we'll see if we can provide you some answers or help to create a plan that will help you decrease, hopefully eliminate uncertainty, which is the only way you'll stop worrying about your money. Because we know right now, I think in the last 20 years, this is the most I've seen people worry about their money. And they're worrying about their money. People that aren't our clients now, they come in for a second opinion. They're worried about your money right now because the world is so screwed up and it's so uncertain. So how in the heck can't your money be all screwed up and be uncertain? So we have to put as much certainty back into your money as possible. And that's what we do when we build a plan, which takes multiple meetings. Every single client understands their money better. Every single client, otherwise we don't let them do their plan. And every single client has less uncertainty in their money and their life. And if you think about that, I want you to imagine what that would feel like. What if we can get rid of 50% of the uncertainty and 50% of the worries, which would be the minimum amount? What if we can get rid of 80% of the uncertainties and 80% of the worries? How would you feel, and what would that look like moving forward for the next 20 or 30 years? And I'll bet you it'd feel really, really good. Jim, let's talk about our people right now. Do we think they are blind to their own potential financial failure? And most people have been led to believe that everything's great in their finances. Even right now, if they go to their advisor and say, hey, Bob, how's things going? Oh, don't worry, everything's great. The market looks great. We're going to rebound. It's just a little baby downturn. We're going to make huge gains. Everything's happening in the Middle East. It'll blow over. Oil will go back down. Inflation won't be there. The stock market will be great. AI is going to kill it. Everything's wonderful. Don't worry about it. And then basically, maybe you trust your advisor who says everything's okay. Maybe you believe the news that everything's okay in the stock market because it does keep hitting all-time highs. Maybe you're an optimist and just believe things will work out and nothing bad will happen and somehow someone will take care of you. But Jim, here is your peak financial wake-up call. You cannot plan and handle your retirement finances this way. You're putting the finances and your family's finances in jeopardy by hoping that you're going to get lucky. So you just can't allow yourself to remain blind to potential issues that could ruin your retirement because you're basing everything on the best case scenario. Like we talked about earlier, you have to plan for the worst case. So let's look at number one. Take this one. You could be taking too much risk. If you don't know how much you could lose in the next stock market crash, your entire retirement could be at risk. What if you didn't know that your current assets could lose 40% or more in a stock market crash and then it actually happened? You probably couldn't recover ever.
Well, Dan, you and I know the answer to this question because we do this every day. We have seen thousands of prospects over the years. And when they come in here, most people come in, they have a 401k or a retirement plan. They have some money outside, maybe in a brokerage account. We ask them, the first thing we say is, how much risk do you think you have in your portfolio? And they kind of look at us and I said, well, let's rephrase that. How much do you think you could lose if the market goes down by 30, 40, or 50%? And everybody kind of looks at us like a deer in headlights. They just don't know that answer. Or they say, oh, I think I'm conservatively positioned, right?
Well, and no one's had that conversation with them before.
Never. No, they don't have that conversation because your stockbroker or your advisor is not going to have that conversation with you because if he scared you with the amount of risk you really have in your portfolio, you probably wouldn't invest with them. So they don't talk about it. That's all we talk about here is risk, 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 because the income plan we put together for you, the tax plan, the legacy plan, it does not work if you lose a lot of money. We can make it look really pretty on paper, but unless we control the risk, unless we mitigate the risk, unless we have you in financial instruments to lower your risk, your plan will not work,
Well,
right?
think about it. What if you go back to that question? If you would lose 40% right now of your assets, if the market took a downturn, how would you feel? So let's just pretend like you've been a great saver and you saved $2 million. And you're so happy you hit that $2 million number. You wish you would have a lot more. You think you should have saved more, but you have $2 million. And you're invested like 95% of the people are invested when we see them come into our office that are between 59 and 65 or 75 years old. And we do a risk analysis and it shows if the market goes down like it did in 2001 and 2 or 2007, 8, 9, you will lose 40%. 95% of the people right now that we do analysis for that are just like you will lose 40%. So you better plan that that's where you're at. Maybe it could be even higher. Well, if that happens, are you okay losing $800,000 of your $2 million? And that means, are you okay with your $2 million now facing retirement or in retirement being reduced to 1.2 million? And the answer 100% of the time when we ask that is no, I'm not okay. The issue is you just didn't know that you have this risk. And right now, every single person listening, unless you have all the money in the bank or in some type of guaranteed fund, you're going to be in that range because 95% of the people have 40% or more risk in their portfolio. And to define it, that simply means you could lose 40%. So for every $1 million, you got to be willing to lose 400,000. And how many people 59 and older can say, oh yeah, Dan and Jim, I have no problem losing 40% of every $1 million?
Nobody would ever say that, but nobody knows that unless there's a risk analysis done on behalf of them. We're using outside research companies. It's not us telling you have risk. You take a standard 60-40 portfolio. I don't care where it's at. 60% in stock funds or stocks and 40% in fixed income. Guess what, folks? You have close to a 40% risk factor. You can't argue with it. We have all the data to show you. We'll actually take your portfolio. We will send it off to the research companies. Of course, we're going to take your name off. We're going to take off all your account numbers, but they will come back with the data. It kind of freaks people out because some people come in with 60% in stock funds, 70% in stocks funds, 80% in stock funds. We ask them how you've done lately. He said pretty well, which they have because the market was in a bull run for many, many years. But then we ask them, how much can you lose? And again, 99% of the people have no idea, Dan. They have none. And if they really knew they could lose 40, 45, or 50%, it would freak them out. And it does until we show it to them and then we fix it, of course.
Well, I just had a client come in, a couple, and they both had their money invested kind of the same. And it was pretty much 60% stock funds, 40% bond funds, like you said. And they each had about $700,000 in their portfolio as of a couple months ago. The market's been volatile. Now in both their plans, they have $650,000. So they lost $100,000 total, which they never thought they could lose in such a short time period. And we have to fix it. And they can't leave these dollars at risk anymore because they're planning to retire right now. And we can't have that type of risk in their portfolio. You're back with Dan Ahmed, Jim Files, the Peak Financial Freedom Hour. Thanks for listening and staying with us. We have been talking today about multiple subjects, but the main one is people just have not been taught enough about their money to understand their money. And because of that, that lack of education has caused them to have uncertainty, which is the root of evil. That's the root of fear. Uncertainty is the root of fear. So we have to get rid of uncertainty as much as possible. We never can get rid of 100% of it. But again, what if we can get rid of 50, 60, 80, 90% of the uncertainty about your money? Think how that would feel. I guarantee you'll feel significantly better and you'll worry less if we can decrease any amount of uncertainty from your life. We get people all the time. Client came in a couple weeks ago, Jim, and they said, you know what? I have to confess. I can't sleep at night. I wake up, I turn on the TV, and at 2 a.m., you and Jim are on TV. That's why I called. They said, because you were like speaking my language because I was so freaked out. Now you're like saying, hey, you can have a plan. You can reduce your risk. You can create income that won't run out. You said all the things that I was worried about. And the good thing was then I couldn't sleep and I woke up. Otherwise, I never would have found you guys. And we know so many of you listening right now, if you're not our clients right now, you have trouble sleeping at night. And if you're married, at least one of you does, because even if one of you says, oh, yeah, I can handle the stock market, I'm okay with 50% losses, I guarantee the other spouse is not saying that same thing. The other spouse is laying awake, wide open, staring at the ceiling, freaked out, heart beating really fast, wondering, what the next bad thing is going to happen to them. So we want to make sure that people understand we want to get rid of the uncertainty. So we're talking about, are you blind to your own possible financial failure? We just talked about risk, because if you at this point suffer one large loss and you're within 5 years of retirement or you're in retirement, there's a high probability if you're using your assets for income, your money's going to run out. And it's even compounded more by the historical fact that if you go back to 1929, every 5 years on average, the stock market drops, and it drops an average of 39.5%. So can you put yourself in that position? And the answer is simple. It's black and white. No, you cannot. You better not put yourself in that position. How about this one? Number two is, I think, what everyone fears. You might not have enough saved to retire or to take out as much income from your assets as you'd like. What I find, what you find, Jim, those clients who have been good savers, saved $1 million, $2 million, $3 million, $4 million, $5 million. None of my clients, none of your clients that have saved that much ever think they've saved enough.
Right.
They always think they've fallen short. They should have saved more. They should have earned a higher rate of return. They should have waited to retire. They should have double in their account. They don't have enough. It's going to run out. It's never going to work. Well, the reason our clients have been successful saving money is because of that fear. Fear is a powerful motivator that you need to continue to save. So that's the only time it's great. Uncertainty provides fear, is the uncertainty of having enough. So you better keep saving. And now our clients have $2, $3, $4 million saved. And guess what? In almost every case, it's enough as long as you don't have a crazy wacko budget. As long as we have $2 million or more, I would say 99.999% of our plans work. So whenever someone gives you, like Susie Orman, oh, you need $8 million to retire. Well, Susie needs $8 million to retire because she has a huge, big budget. You don't need $8 million to retire. We found the magic number is $1.5 million and above. And that's even if you don't have a pension, as long as you just have a normal, average, everyday budget and you're able to travel and do those kinds of things. So That's the number one thing is I really feel sorry and sad for people to come in and they're 60 and 65 and they've saved $3 million and they feel like they've failed.
Yeah.
They literally feel like they failed. I mean, it's very sad because they saved for 30 years. They worked their butts off to save $3 million. That's hard. Very few people have done that, but they have no idea. Number one, that very few people have done that. Number two, they have no idea how successful they're going to be at retirement because no one has been able to quantify what does that $3 million mean for income for them for the rest of their life.
Yeah, so funny, Dan, because, when we talk about this, people presume that, okay, I can put 4%, take 4% of my portfolio, maybe 5%, maybe 6%, because the market went up 12% last year, went up 15% the year before. Yeah, it dropped 19% in 2022. But over the long period, I can take out 5%. Well, if you do the math, and we can show you, let's assume you're 60, you live to life expectancy, which is 85, that's 25 years, right? Let's go back 25 years. Let's run the numbers, and we can show you, start in 2000, let's assume you were 60 back then, and let's assume you had $2 million, and you're going to take out 5% per year out of your portfolio in the form of income. Seems reasonable, right? Which is about $100,000 a year. We can show you that going through good markets and bad markets in about 12 and a half or 13 years, you would have gone broke. You would have run out of money. And that's what you're worried about, right? What we do is we remodel portfolios. We're using different financial instruments. We're using instruments that some instruments have no market risk. Some of them can generate a high level of guaranteed income. Some of them have growth potential. But by restructuring your portfolio, we can get to that 5%, 6%, sometimes even higher, Dan, on these financial instruments and make sure you will not run out of money. So that's the big difference when we're talking about risk and uncertainty is, yes, if you're trying to use conventional methods like you've used for the last 40 years when you were saving for money, to use those same methods in retirement to generate income off your portfolio, it's a different ballgame.
Well, here's an example, clear cut of what you're just talking about. Client 65 came in, they had about $2 million saved, and they had been told they can take out 5% per year. Well, that means $100,000,
Yep.
and that means they're going to have to earn a decent rate of return because that 5% has to be net of fees. But if we go back and look at the last 25 years, because these people thought at least one of them lived till 90, which is 25 years, their money they were uncertain how long it would last. We made it certain. We told them if they earn stock market rates of return that have happened since 2000 until now, their money would last 12 years.
Yep.
And they're out of money, nothing left. And that was just based on normal stock market rates of return, taking 5% out, which seems realistic. And they couldn't believe it. And it scared the heck out of them because that would have scared the heck out of me. Well, then we did an analysis and showed them if we reduce their risk from where they were about 50% down to about 5%, we'd be able to take out $140,000 a year of income, and their income would last for as long as they live. So think about what that means. Their income would last for as long as they lived, and they don't have to worry about it. And they now were going to get more income. So it got rid of the uncertainty and put back certainty, which is what then allows them to have a really wonderful retirement and more money to travel than they thought they were going to need.
For more information about Peak Financial Freedom Group or to schedule a consultation, just go to our website, peakfin.com. That's peakfin.com. And thanks for watching.